Let's say good morning to Dan White from Dan White and Associates, and we like to promote their Lewis office here in our area. Great to have you here, Dan, and I'm anxious to hear your tip today. There is a little-known rule concerning your required minimum distributions. Can you explain that, Dan?
Yeah, so Dan, I think most people are aware that if you turn 73, if you're going to turn 73 in 2026, you need to take a required minimum distribution from your IRA account. And usually the RMD is calculated using the IRS Uniform Lifetime Table. But there is this little-known rule. If you are married to a spouse who is more than 10 years younger, could be a first marriage, could be a second marriage, who knows? But your spouse is the sole primary beneficiary of the IRA, this special rule applies. You may calculate your RMD using the IRS Joint Life Expectancy Table instead. So why would somebody do this? What's the benefit? Well, the RMD is smaller. The IRS kind of recognizes the age gap, and they don't want the younger spouse to run out of money prematurely. And this can be an advantage for IRA owners who really don't need the money and want to minimize taxable income. But the caveat is, remember, the spouse has to be the sole primary beneficiary for the entire year to use this special rule. If you, let's say it's a second marriage, and you name the second wife and maybe your two kids from the first marriage, if you name multiple beneficiaries, then you have to use the Uniform Lifetime Table. And contingent beneficiaries are not considered when determining if your spouse is your primary beneficiary. And the opportunity to take this smaller RMD is often missed. Many IRA custodians default to the Uniform Lifetime Table when providing the RMD statements, which they're required to do to IRA owners. So the custodians may be giving you bad information. The RMD statement may not give you the correct RMD amount if your spouse is your sole beneficiary and is more than 10 years younger than you. So again, some people are aware of this, but I find it's often overlooked, and it's a key factor. It can reduce the amount of your RMD if you don't need all the money.
That's why we have Dan White and Associates, to make sure we're aware of all of these things. And I know you'd love people to visit Dan White and Associates on Savannah Road in Lewis. Anything you want to say about the Lewis office or inviting people in?
Yeah, we're in a little bit of a transition down there. The advisor we had decided to go in a different direction, so we are training a new advisor. But as of right now, the 4 advisors we have are rotating among Savannah Road. We're getting down there once a week, so we're open for business, and we're going to have a new staff down there shortly. Dan
White, always a pleasure. Thank you so much. Dan White and Associates here on Delaware 105.9.